Hello, everybody. It's OCTA. It's Tuesday. Thank you all for coming. We have a lot of stuff to go through. Today should be called 42 Nuggets. That's 42 pieces of information we're going to do in about 20 minutes or as close as we can get to that. And 42 is an interesting number because that's 2 times 21, which is 21 million Bitcoin. So I always try and find patterns in numbers. This one's about March. So we're going to talk about what to expect from March. We're going to look at history, we're going to look at on-chain data, and see how things are lining up. There's still a lot of pessimism out there. We're going to look at unlocks. We're going to look at ETH. We're going to look at NFT marketplaces. We're going to look at a little bit of macro stuff. We're going to look at liquidity from different parts of the world. And we'll see if things like the SEC and the Fed really do matter or not. So, disclaimer, this is edutainment. And starting with the good news. Lots of good news, believe it or not, despite the sentiment out there. Let's look at this chart. Bitcoin, even though it was a rough week, when compared to pretty much every other crypto, with the exception of Stacks and IMX, it beat them all. And it's rare we see that. Of course, stablecoins don't matter, but that was an unusual week. Let's dig into another nice chart from our friends at Bitcoin. This is a really good one from Charts BTC. And the beauty of this is when you zoom out, the world looks so simple. And everybody should always kind of zoom out when they can. And it'll help you see exactly where we are, where we're going. And that's what I try and do as well. Find patterns. There are still many hoping for that $10,000 or $20,000, $12,000 Bitcoin. But let's dig into some history today and find out exactly where things are going. But if you look at this, you can see that 2023 has been great so far. Ever since the bottom for FTX, I think it was November 8th. Things have been very good. 2023 up 41% so far for Bitcoin after a nasty year last year where Bitcoin fell 64%. But it's kind of has a long way to go, a long way to climb, but we'll see how we can get there. So first of all, let's talk about decoupling news. This is Nasdaq versus Bitcoin. And you can see the performance over the last 90 days, not year to date, last 90 days. You can see Bitcoin's up 49%, where the Nasdaq is only up 7%. That's pretty stunning. That is a nice decoupling. And a lot of people are now talking much more about the whole decoupling and the importance of that as we go forward. Let's also talk about crypto market caps. This from El Crypto Prof. Again, zooming out, finding patterns in history. At the bottom here, you have the RSI. And when it's above 50, the red line in there is the 50 mark. And at the top, you have the total crypto market cap. And it's going through the exact same scenario as in 2018 and 2020. And we all know what happened at the end of 2018 and in 2020. Things went crazy. The important line on this chart is that blue line. That's the 200-day moving average. And what happens after it reclaims being under that level. And at the same time, you look down to the bottom and you see where RSI bottomed, the orange parallel, and where the RSI goes through the 50 mark, the yellow dot. So when you look at these patterns, again, you see the exact same situation repeating right now in 2022, 2023. This means if history repeats, markets go higher after the reclamation of the 200-day moving average. So El Crypto Prof, thank you for sharing this great chart. It's nice to look at the total crypto market cap as well. And we will break down into the different subsets in a minute. But is Bitcoin season returning? Well, we know this chart. We cover it every single week. And you can see it's dipping down again towards Bitcoin season. Not there yet at 35. Bitcoin season is 25. And again, as a reminder, that's when 75% of the top 50 coins perform better than Bitcoin. It is altcoin season. And the opposite when it's Bitcoin season. And this excludes, of course, stablecoins too. So again, with all the fear, uncertainty, and doubt spread by the SEC, it has made certain altcoins a little less popular. But certain ones have actually done quite well. So let's look at history. Let's look at our monthly calendar. I've updated it for January, February, March 2023. These are the returns. January was up 39.9%, February 1.39%, and so far in March 2.2%, but Bitcoin has dipped a little bit. The key number is we need to stay above 22,800 to keep it green for the month. And that is psychologically very important for people out there. Now, what I also did with this chart, which put together and updated with new numbers, is I created 3 big red barriers, and they represent the bear markets like we covered before. 2022 was a bear. So if you try to find the analog of 2023, that would be 2019, and it's off by a month. But if you imagine in 2019, we had Feb, March, April, May, June, all positive, a 5-month run of all positive numbers. And it's rare you get that these days, but it could be possible again. We might get a positive April or May as we go forward. And again, like anything in any market, things take a breather. But that is interesting. Also, if you look at the averages below, April is 36% return on average over the history of Bitcoin, only beaten by November. Now, the reason I stress that, because you don't get the gainers in April unless you buy in March. If you're not on the train, you could miss that. And again, I'm just looking at history and explaining how things work. But typically, March is the best month to buy because the next 60 to 90 days, you get the biggest gains. And that's why I'm sharing this chart here. Not financial advice, just if history repeats. Now let's look at what the options traders are doing. You can see here a huge skew on the put call ratio, 0.44. Most people are buying calls, and the calls they're buying are 25K strikes, 27K strikes, 30K strikes, a little bit of 31 and 32K as well. Heavy bullish action on Deribit. A lot of money going into these future contracts, and this is out to May 26th, 2023. So many believe the next 2 months, 3 months will be pretty good, and that is in line with history. But maybe the options traders are betting on history. We don't know. We'll see. But let's see if we can back it up with more data. Now, a quick revisit of what I stressed, and I want to make sure people get this. A lot of people say, oh, April always sucks because of tax loss selling. Well, no, it doesn't. You can see here the average monthly returns. It's amazing in the US and around the world, only beaten by November. And again, to be able to get those gains means people need to be in position on the train. And that's why the story today is about March and what we can anticipate. But buying in March means returns historically are extremely good in April and May. So maybe that's why the options players are there. So let's jump ahead. Let's talk about some other supply crunch data. Bitcoin dormant 10 years plus. This is from Will Clemente, courtesy of Sanjay. Thank you so much. You can see here the black line is the, let me get this right, Bitcoin price. The purple line is Bitcoin supply last active more than 10 years ago. And you got the teal blue line. You can see here the amount on exchanges, which is, 5-6 year low at this stage. That is crazy. But the point is the 10-year supply that has not moved in over 10 years now exceeds the amount of balance on exchanges. History is made, ladies and gentlemen. Super interesting to see that. And again, supply is dwindling. Supply crunch is coming. We just don't know when. Let's talk about Plan B's latest chart. This ties into Metcalfe and adoption and the S-curve. Now, I have a lot of respect for Plan B. I know a lot of people have certain things to say, but nobody has a crystal ball. But I did a video last week. Let me zoom out for a second. I'll put it up here after this video. It was Metcalfe's law for Ethereum and the impact of the price. Let's look at the latest from Plan B on Bitcoin, and he calls it Bitcoin adoption S-curve. Basically, it ties back to Metcalfe's law, these numbers here. The numbers that go up from blue are the adoption rate. You can see we're still in that kind of maybe going from the 2 to 4% range of adoption globally of Bitcoin, which is still very, very early in the life cycle of Bitcoin. But the most important thing is the purple line. And that is, it has normally been above the actual Metcalfe's expected price or the adoption expected price of Bitcoin. The fact that now we are very much under it technically means you could construe that Bitcoin is drastically undervalued. And the other interesting thing as well, Plan B says diminishing returns will not start until we hit 50% plus adoption rate, which means going way up and to the right. So the question is, what would that be? And you can see some crazy numbers on there as to dates and times and prices. If Metcalfe's law follows and there is a certain amount of adoption, etc., and this is based on the adoption growth rate, quickly get to 50%, that means we could be there by 2026, 2028, which means the price could be north of $1 million. I know it sounds like hopium, but again, when you look at the power of the network, it's one thing, and that typically does drive price. But even more importantly is the scarcity of this asset. That is something that I've never seen before in my life. So let's talk about another thing as well. This is the Bitcoin DRM. This is a difficulty regression model, and it's an estimated all-in cost of production for Bitcoin. And the value reflects the production cost, which right now currently is $21,000. And also, when the price is above the DRM, miners come back online. And of course, hash rate goes through the roof. But it's also a good indicator of a bear and a bull market, especially when we are above. So another little piece of good news there from looking at Bitcoin on-chain data. Now let's talk about liquidity. A lot of people are buzzed saying, oh, US economy, the Fed, interest rates, liquidity, money supply tightening. Let's look at two charts real quick. This is on the top, you've got Chinese stocks in yellow, Bitcoin in black, and US tech stocks in red. And as I showed you the decoupling before, you can see how all these different charts actually are interrelated in one way or another. But you have the black, the price of Bitcoin, right between US tech stocks and Chinese stocks, which is interesting. I do fully expect, despite it being the most crowded trade right now, I spoke about a couple of weeks ago, everybody's plowing into the Chinese market. But not only that, if you go to the bottom of this chart, you'll see US liquidity, and it's waning, dropping ever so slightly, still up, but not like what it was in the past. But also, Chinese liquidity injections hit an all-time high last Friday. I'll talk more about that in a minute. So this is a counterweight for crypto and will also fuel Chinese stocks and risk assets. And China's central bank performed, again, that single largest liquidity event injection last Friday to help the economy out of historically depressed levels. So where does this all lead us? Well, Chinese typically invest in real estate. That market got smashed. They typically buy apartments overseas, Australia, Canada, etc. Now they're looking for different assets. And with Hong Kong opening up to Bitcoin, that could be the gateway for Chinese to invest in more Bitcoin. So we could see supply drain quicker than we expect. Let's look at another quick version. This is from Bitcoin Magazine and the Rational Root. Here you can see the money supply, M2 US in green, and the money supply M2 in Chinese yuan. And you can see it's way, way bigger. So it doesn't really matter anymore what M2 is doing or what the Fed is doing. And I know macro is weak and the Fed think that they control inflation and everything else. They don't. The Fed continue to look at data that's 6 months old, and that's their prerogative. And it's a little bit irrational in my mind, but hey, what matters is the Chinese money supply is growing. And we all know when money supply grows, when there's liquidity in the markets, number go up. The question is, how many Chinese are buying Bitcoin right now? And will they wait to do it when Hong Kong opens up in May? That's the $1 million question. Imagine if they're all waiting at the sidelines with all this liquidity. May opens up and it becomes a bunker month as well. All very possible, but I'm just speculating here. Let's look at digital asset flows. You can see the macro is still weighing. Digital asset investment products saw minor outflows totaling 2 million. And this does mask the broader negative sentiment as the largest inflows were into short investment products again. That Bitcoin short product was very, very popular. And that's why you see this negative number. But it's actually a lot worse than that if you take into account exactly what they're investing in. Anyway, let's look at the digital flows by asset. And again, everything is still very polarized. You have Bitcoin, the week flows minus 12 million, and then the short Bitcoin plus 10 million. So they kind of net each other off. So a lot of bearish positions, which we didn't see in the chart in the options positions out to May 2023, which is interesting. Litecoin drained 200K, Solana up 500,000, Polygon up 600,000, and some other names getting a couple of $100,000 each as well. But again, the market is still a little bit nervous as we go forward. And what's interesting as well is Ethereum has remained relatively insulated from the recent negative sentiment, only seeing 200K of outflows last week. And that is also interesting. Polygon also had some inflows too. So there are the numbers. Let's look at how the top 50 alts are doing versus Bitcoin over the last 90 days. You can see Bitcoin is going up the charts. They were a little lower last week, but that's because the relative strength over the last week of Bitcoin has been very strong compared to others. And again, new L1s are on fire. Even the L2 stacks up 230% over the last 90 days. And again, when things blow up like that, I get so many messages saying, hey, what's with stacks? Is it good? What's the compendium score like? Compendium score sucks on stacks. But this is just, hype. Never chase, replace. Remember those simple rules, because after such a big move, you're not going to get much. And you still have your Lido, your Aptos, your Graph, etc., all up and to the right. And then the older names down to the right as well. Kind of not going anywhere. Nice to see Doge down, 25%, I think, over the last 90 days. So remember, if you invest in something, make sure there's users, make sure there's utility, okay? Very important. Meme stocks, meme tokens, not so much. You'll pay the price over time eventually. Sorry if I offended anybody with that, but, the Shiba Inus and the Doges, and it's like, why they even exist, I don't know. For fun, maybe. Let's go. Small caps, though, win the month, which is big. Over the last 30 days, you can see the small caps are up 13%, Bitcoin 2%, large caps 2%, mid caps flat. And basically, small cap strength typically ensues a lot of altcoin rotation. And you saw that with some of the names that are just pumping like mad. And Bitcoin and other indexes have moved in tight correlation throughout the past month. But small caps had excess returns again, fueled by rotations into different narratives that are popping up, like stacks and ordinals and layer 2s on Bitcoin, all that stuff. That's what drives the price action. Now you need to be ahead of the narratives if you want to catch these pumps. Let's talk about Ethereum. Gas is on the rise again. I drew a little red line on the Glassnode chart at the bottom. You can see from basically September up to today, it's up and to the right. It's gradual, but sustained increase in gas costs. And gas prices are currently sitting at that 38 GWE level, exceeding the gas cost spikes we saw during the bear market around things like FTX collapse and Binance bank run, etc. But the incremental nature of gas demand suggests, though, the positive here, and this is why it's in the good news area, because it shows a resurgence of network activity on Ethereum, which is good for all crypto. That's why it's in here, ladies and gentlemen. Not that it's good to pay high gas fees, but it means there's more adoption, more use. And where is that use coming from? Well, it's driven by NFT gas usage. NFT recovery is in play. We had the old NFT boom between mid-2021 and mid-2022, and then the NFT fall from summer 2022 onwards, and now it's recovering up, and that's driving a lot of the action on Ethereum and, ETH-based NFTs. In addition, we have the blur effect, as I call it. While the token itself, Blur, lost about 13% over the last week, the airdrop brought new attention to the upstart rival. As a result, Blur's market share jumped by 34%. That's the kind of deep orange here on this chart. And OpenSea went from nearly 40% down to 15%. And in an attempt to counter its upstart rival, OpenSea came out, and I think they said a bold move in restructuring their fee model and policies, going to zero fees, etc. But again, they are still, despite all that, unable to retain market share. Now, I covered this on DCA with the guys yesterday, and we talk about how fickle and how unloyal crypto users are. They go to where it's cheapest and fastest and where they get the best user experience and the best products. And that's it. That's the name of the game. And to flip like this in the space of a week is stunning. OpenSea was the gorilla for a long time. And then Blur comes along. Everybody's gone. Out the door. In a second. And then OpenSea try to retaliate and match their fees. Nobody cares. So, lesson for everybody. The market moves fast. Let's also look at some NFT volume by blockchain. I highlighted a couple of things here with red and green boxes. So if you look at Ethereum, green all the way, both in terms of sales are up 18%, transactions are up 53%, buyers are up 20%, and sellers are up 18%. Full, beautiful scorecard for Ethereum. Solana, sales are down 44%, transactions are down 29%, but the numbers of buyers are up 27% and the numbers of sellers are up 37%. So what that basically means is the items that they sell on Solana are a lot cheaper than they are on Ethereum. The NFTs in Ethereum are much more expensive, much higher value. If you look at Cardano, down in terms of sales, down in terms of transactions, down in terms of buyers, down in terms of sellers again. And then the red for BNB, same thing, down heavy in terms of buyers, down 73% and down 30%. I don't know if that has to do with the fact that there's a lot of scrutiny now being shone on Binance and people are running for the door, especially around all the BUSD and everything else. But this is very telling. And again, it's a kind of a microcosm as to what's happening with the greater chains overall. So let's watch this space. Now, in Unlock news, my job is to sometimes share news that people don't like. But that's what I'll do. I don't care if people get hurt or not. But these are the big unlocks, I should say, over the next week. HBAR, $250 million in the next 8 days. Steppen, $250,000 a day. Sweatcoin, ready to dump about $73,000 a day. DYDX, etc. Again, pause the screen, check it out, see if you have any of these things, because you could be facing a lot of sell pressure as you go forward, and that is staggering, especially the HBAR one too. In addition, let's switch to macro real quick and then get back to crypto in a second. But this is the home price inflation. You can see that beautiful chart, up and then down. And this is kind of from COVID 2020, 2019, all the way up because people wanted a better house to live in because they were locked at home. Now it's tanked down again. So again, that tells you exactly the work that the Fed is doing. They're destroying demand. Buyers have left the market, not only buyers for houses, but also cars when they try to finance a vehicle that has gone up in price. And now it's financed at 7 or 9% versus 3 or 4 or 5% a year ago. It's a very different situation. It changes the calculus. So buyers are leaving the markets, except for cash buyers who are looking for kind of big investment properties. And that is crazy. So good job, JP. Let's talk about China for a second. China is crushing it in car creation. China has emerged as the pandemic winner as an auto export powerhouse. The China is the red line at the bottom, just going up and to the right. US is kind of down. South Korea is up a little bit, but Germany and Japan got hit the hardest. And Japan is having tremendous problems with production and everything else, despite their heavy, heavy money printing. Now let's look at stocks over the last 7 days. A very red bag here. A couple of things. You got JP Morgan up a little bit. Nvidia up a whopping 14%. Tesla up, I can't read those numbers, 5% I think. And Meta up a little bit too, about 3%. The rest is kind of red across the board. Not too good. And remember, we'll talk a bit about one of those names in a second too. But let's look at this. I always talk about the black holes that eat it all. This chart is staggering. And again, thank you, Sanjay, for sharing with me. I appreciate it very much. This looks at the total contribution from the 8 FANG and MNT stocks. And then the gray is the contribution from the other 492 stocks in the S&P 500. Like it is just, and I know if you look historically, it has been very, very volatile. These disruptive names are volatile, but literally most of the time, these 8 companies generate 60% or more of the return for the S&P 500. So the question is, do you want to buy an index or do you want to buy those 8 names? Because if history repeats, you don't want to be on the 492. You want to be in the 8. And that is just a beautiful picture that represents exactly that. Let's talk about another piece of good news, which actually impacts inflation, which is why the Fed is going so nutty right now. But this is services inflation, as we know, is sticky and will come down slowly. But guess what? Global supply chains have gotten unstuck in a major way, which means delivery times are far shorter than normal in places like Germany, which is blue, and the US in red. And this helpful supply shock, or should I say supply greasing the skids of supply chains. Getting products to market faster makes them cheaper, and there's less fluctuations and everything else. So this is huge news, and this will be a tailwind for deflation, or bringing inflation down fast as we go forward. In addition, another piece of environmental good news, fusion in the sky, solar energy is expected to exceed all other sources of power generation from wind, hydropower, bioenergy, coal, natural gas by the year 2027. And I know a lot of people are kind of queuing up to get their solar roofs, but they just can't get them. But hopefully, somebody will crack the code in getting more panels out to people so they can create their own little utility and not be dependent on chronic monopolies that gouge them every day. Now, into the bad news. Sorry, everybody. There's always got to be some bad news. Let's look at the crypto market over the last 7 days in terms of US dollars. Horrible. Bitcoin down 6%. Binance down. Solana down. Cardano down. Doge. Ethereum is kind of holding up better than Bitcoin over the last 7 days, which is good. Matic deep red as well up here on the right. And that is the crypto market. So again, after such a good run, it's taking a bit of a breather. And hopefully we can get that green close today. I'm watching it very carefully. It's 23,214. We need to stay above 22,800. We have $428 to play with here. Let's make sure Bitcoin doesn't dip. $428 over the next, how many hours is that? 2 or 3 hours, I think. Bitcoin hash rate, as we mentioned earlier, the miners are making money. Therefore, more of them are plugging their rigs in. And here the hash rate is going up and to the right hard, making it not as profitable to mine Bitcoin. But those with the new modern miners are doing very well. The all-in cost of mining a Bitcoin is about $12K for many of them. So that's interesting. And remember, the higher the hash rate, the higher the security. Let's talk about another one that we should be concerned about. This is a cool little ratio from K33. It used to be Arcane Research. And I love this statistic. It's what they call the open interest to proof of reserves ratios. You guys know I like ratios. It's a great way to get insight as to what's going on. But here below, you can see two names called MEXC and BitGet. Ratio of open interest relative to proof of reserves sits at 400%, well above other peers who typically see an open interest to proof of reserve ratio below 100%. These guys are running at 4x that. And this can only happen if one of two things happens. One, traders on MEXC or BitGet are far more leveraged than any other platform, which can be the case. Or B, if the numbers are manipulated. And again, according to K33, they don't see any signs of excess liquidations on any of these exchanges during volatile conditions, and view alternative B as a possible explanation that the numbers are being manipulated. But I don't know. But just be careful. If you do play with these things, don't have a lot of money on there. Just in case. Always be fearful. Let's look at stablecoins as well over the last 2 years, courtesy of Glassnode. You can see here BUSD. That little orangey line above the pink line has just gone down and to the right. You can see that USDT at the top. Actually, USDT is green. The top is the aggregate of all four. My mistake, I'm just seeing it now. But you can see USDC is a little bit on the rise, but USDT is on the rise more. And of course, DAI is just DAI, stays down there and doesn't do much. So that was interesting to see, but people are definitely running for the doors when it comes to BUSDs. Be careful if you hold that Bitcoin. Probably best to swap it into something else. Now, a little bit of ugly news. I'll get on my little soapbox again right here. I'm going to talk about examples of how we need the fusion in the sky, how we need to run solar panels. This is my local utility. It's Pacific Gas and Electric. They do things like burn down forests and stuff, and chronic service, but you have no choice. They run a monopoly. And here in blue, you see the US average prices, and in purple, the San Francisco prices. And the energy cost, kilowatt hour of energy now, is north of 32 cents per kilowatt hour. But in many places in the US, it's 9 cents. There's nearly 4x in some cases. Now, the kilowatt hour in San Francisco is up 60% since 2019. That is shocking. But gas is up 86% since 2019. Now, I know there's a change in energy prices and everything else, but boy, do these utilities gouge people? And the reason I mention this is for tomorrow. Tesla Investor Day is not bad news, but we don't know what they're going to say. But what we do know is it's going to be earth-shattering for people and hopefully investors who care. So, we'll see what happens. But what I hope they will do as part of their master plan is find ways to bring cheaper energy or bring the cost of energy down to zero to the world, as well as make EVs more abundant, cheaper, more accessible, etc. Again, better than having monopolies just screw consumers, especially in these hard times when your energy bill doubles in the space of a few months. How are you going to cope with that? Especially when San Francisco hit a record low temperature last week. 132-year-old record broke last week. It's so cold. Anyway, enough of that. Let's talk about the FOMC real quick, and then we'll wrap it up. Remember, the Fed does not control inflation. The Fed does not control fuel prices. The Fed does not control the OPEC. The Fed does not control supply chains. And the Fed knows it can't do things like control the labor shortfall of 3.5 million workers, which is driven by 2+ million early retirements and structural change in the labor market as well, people moving to the gig economy. The Fed can only destroy demand, and on a happy note, that's what they're going to do. So it's kind of sad. And before I wrap, one quick question from Stephen Weston. He wants an update on Sol, and I'll definitely do that real soon. We're just digesting everything. I'm waiting for all the data to come in to see how impacted the chain was because of the events over the weekend, and we'll see where we go. But again, like everything else, like with Blur, like everything else, my thesis: people will buy the best product at the best price, with the least amount of friction and the best product market fit, user experience, etc. That's just how it is in the world. That's just how humans are. If there was a new utility in San Francisco with better, cheaper electricity, do you think PG&E would have any customers? Nope. So that's it. And if we had a better Fed, we'd probably all go there too. Anyway, with that, everybody, thank you all for being here. Hit the like on the way out if you can, so people can get some of this good stuff. Big thank you to the moderators in the chat and the near 2,000 people there watching live. Appreciate you all, and I'll see you all tomorrow. I'm going to be doing a big global real estate update either tomorrow or the next day, depending on what happens with AI Day and what I do. So with that, talk to you soon. Thank you so much, everybody, for being here.